Maybe
Can
give it
you
a
hear my music?
no.
Okay,
Alright.
that's weird.
I was looking at Ethereum too. Ethereum is super close to some strong resistance right now, but the way this market's been pushing, man, I wouldn't be surprised. It keeps doing something like this and just fucking continues going up to the 220s, to the 22s.
Ah, it's the L.
Yeah.
How about the wavelength stream? Can you hear it now?
I don't
Just
hear it. I think I
XLR
have to
mic.
click on to watch your stream to hear it though.
It's all good. I'll just keep it the mic.
See. No, I don't hear it. But yeah.
It's all good. I'll just keep it chill.
All right, guys. All right, let me just go over Monday prep real quick. So what's going on, guys? So you already know, guys, we're right back to our Monday preps, Sunday preps, right? Had to move it over to Sunday today, which I don't mind, man, because I like Sundays, bro. I really do rather just get into our, analysis on a nice Sunday afternoon, Sunday night, and just, get prepared for the rest of this week. Our BTC, man. BTC is still in the zone, man. We've been in the zone what, for almost a week already. We still right in the zone. We played a nice short, like I said, last week, even the week before, man. We were able to get capitalized twice on the nice shorts because it's just, we're at that threshold, man, between that 28 and that 30K mark where right here a lot can happen, right? Either, we can obviously get the nice rejection and, we can start going back to these levels, depending on how your market's doing, but right now, even with bad news, right? Like we've still been able to push past resistance. We broke this nice trend. We were in a nice bullish channel for the past few weeks. We broke right above it, which I always told you guys it's a really, really good sign, man. I've seen some pretty strong runs after a nice bullish break from the above resistance in a bullish channel. We also broke past his demand zone, and now we're literally, well, it was a supply zone. Now it's turned into a demand zone. And that we're at this last threshold, man. And I always told you guys in every class that we do, that 30K line is always going to be that strong mark for me. I've seen it hit there so many times and seen just strong reactions to it that even what we're doing right now, right? Like we're kind of almost having trouble breaking right above it. Um, However, if my theory is if we do break it, I mean, start looking for these big fucking zones, man, to move up, right? Like that 32, 36. We all drew out, we drew these lines out a while ago. I want to say maybe around this time, right? A few weeks back, I want to say maybe a few months back. We put up these lines because now we can actually start looking at these levels again, which we haven't been able to in over a year, right? If anything, we were looking at these levels, but it was coming down, and now that we already passed that whole year and a few months of just straight downtrend, we're breaking levels, man. We're breaking levels to start looking really, really nice for a nice bullish run. So again, if we continue to do this, man, I'm always gonna say that we're looking really bullish right now. To say we're in a bull market again, I wouldn't just throw that out there. Like I still don't feel we're there yet. I want to see us break through this last threshold right here in the 30 mark. For us to really kind of say, hey, look, you know what? Now we're back in this bullish market, and really start seeing these levels again. So, for now, we're still doing great though, man. I still think this market is doing really well compared to what we were supposed to be doing, right? Like, we all know around these times, 15K, 17K every area, everybody was preaching for the 12K, right? Everybody and their mother was saying that 12K was eminent, that there was no if, ands, or buts about it. We were going to see that 12K, and the market did a surprise, and went the complete opposite way. So, but again, it doesn't mean that it's out the question, right? Like we're still kind of boxed in, right around here where, like I said, man, if we really, if we break these 30, man, I'm really hoping to see these other levels. But if we don't, then, just it's our market. We're used to it. We're used to seeing nice runs, and then rejecting and coming right back down. So, it wouldn't be a bad thing. If anything, again, right? Like I always say, and anytime we have rejections like that, and we do start coming to these lower levels, those are the times where you're adding to your spot wallet, right? I've been adding more and more to my spot. every week. I started to transfer everything over to my ledger, so I definitely want to go over those a few times with you guys and try to kind of give you guys a nice indication of how to secure your coins. You know, not leave them in these exchanges because as you can see, what happened to FTX and these other exchanges, you never know, right? Like 1 minute it can be there, you can wake up, and the next minute, you know, the fucking owner killed someone, and the whole, you know, the whole exchange as a whole will go tumbling down, right? And you don't want your money in there, so you know, you got to secure these things, man. And you know, me and Twist has been doing a lot of homework, and we've only seen that the more, you know, these ledgers is where you want to kind of really put them in there. So we have a partnership with them. We'll put a link out soon too, so you guys can sign on with Ledger. And secure those wallets, man. I know I have already, like I said, I just transferred a few of my other coins, my Matic, everything that I have long term. I just transferred it over there over the weekend, and I'm happy now. You know, now I have my everything under my crypto wallet, secure with my codes and everything, and my, you know, things in my safe, so we can keep these things secure. So I'll teach you guys how to do that as well whenever you guys get a chance, or you know, next time we have a nice class on just how to secure your crypto. We'll definitely touch up on how to do that. All right, so yeah, guys, right now, like I said, Bitcoin looking pretty strong, man. It's still holding above these levels. It kind of built nice little demand zone, I want to say now, right down here, and it was a nice little supply zone, but kind of really flipped over. We're still in this nice little area right here, again, right in between 26 and the 28. So, you know, I'm looking for that move, man. You know, at the same time, I mean, right now it's exactly right resistance here, which is just showing you that we do have some sell orders right here to look out for. But let me see. Let me look at a smaller time frame. Right, already broke trend once. I think we're right here now. So we're kind of right at this trend line as we speak right now. Right, so we'd be looking for a nice break from that to continue. Maybe some nice shorts. Maybe get a nice little bounce to the 25, 26 area, 27, more like 27, 26. If we could get a nice break, I'll definitely something to look for, right? For shorts. Let me actually put my my alert on this that if it does break, it's something I definitely want to look at today for possible
I'm
swing.
seeing the inverse head and shoulders right now, personally, on the 15 minute. I can show you my screen, but you
Yeah,
got
yeah, yeah.
yourself
Throw it on.
this shoulder, head, and possible shoulder, like reclaiming this volume based trend cloud on my indicator here, and it's starting to thin from a selling volume into a buying volume. So it likes to break through the cloud and kiss it before it goes through, and that's if it's thick and it rejects and it rejects when it breaks through the cloud, then that gives you that easy idea to enter. And we actually entered a trade at for 4 grand at 2809. We're up $70 so far at 5x. This was where we entered right here. But you know, I'm going based off of fibs. Like if I go to the hourly time frame and just zoom out here, this is like a local impulse to the upside, and it's a 618 bounce. So you look for that rejection of the 6 Juanita, as some other people call it. So you get that rejection bounce, and I'd previously shorted up here all the way down to that zone because I saw this liquidity pool. There's this 100x guy down here at a 194 million down here, and I was like, that dude better pay himself or they're gonna knock his daylights out, and they sure did. And that coincided with the 618 bounce, so that's why I shorted up here all the way down to there. This is kind of like a cheat code. This is high block capital if you guys don't know what it is. But right now I'm seeing more bubbles open up to the upside here as opposed to the downside. So you're getting this short imbalance. They induce some more shorts here. So the whole pattern of what pattern trading is with the inverse head and shoulder is like an inducement for shorts to like, we're weak. I promise you we're weak. I really do. I really do. And then it short squeezes their ass off. So as I see up here at 29K, you got this caked up 50 and 25x zone. So that's not out of the question on this 1 minute time frame for high block capital. You do have to be aware that there is some stacked liquidity down here at 27.1, but as it shows on the cumulative liquidation levels delta that we're a billion imbalance to shorts on this 6 days of data, but it always gets lost in as it moves forward in time. So this changes. So as these bubbles disappear into the ether, it'll show more short imbalance. So you have to look at like higher time frames. I don't know if I'm like stealing the show or anything. So just stop me if I'm, you know,
No, you good,
uh,
brother. You good.
yeah. So, like, if I go to the higher time frame, this is when you learn in like ICT or smart money concepts about internal versus external liquidity. So that this thing is like internal liquidity, the whole sideways consolidation. You could look at this as a trading range. And so these pools are where we're pinging back and forth, knocking out 50x and 100x traders, swatting them off like gnats or something. And basically, when you start looking at these other time frames, you can see these external pools, and there's 5 billion up here at 29.5 and 5 billion down here at 27.4, and so that's pretty even Steven. So you have to go to even further back external pool on the monthly, and basically you'll start to see a grander narrative start to play out. So you see here that previously, let's say at March 17th at 29.4, we had only 4 billion induced shorts up here at 29.4, but currently that 29.4 has 19 billion in short liquidity to take. And that's what that buy side, sell side liquidity is. This is like literally visualizing open trades. It's literally like a cheat code. So you can basically see how it's getting hotter, and this key over on the left shows you 18 billion is yellow. So you can see which side is hotter. So on this monthly time frame, it's clearly favoring 29.4, which is why I was talking about this pool up here being a juicy target, which is also why I went long as I shorted up here. But it could double bottom, it could go grab those guys beneath in this pocket region. So I already took profits and re-entered on the first bounce because it always double bottoms, so I have a little bit of a cushion. But yeah, I mean, I can keep going after that, but I'll just stop here. But there's the yearly time frames. There is like a paved path to the upside in terms of like liquidity pools starting to form up to 35K and stuff, and you got 84 billion up at 34.8. So it's like Cypher in the Matrix. He's like, I don't believe it. Like it's hard for me to say this, but there are paths starting to be paved to the upside, like 76 billion at 32.8 and 41 billion, 33.6, 61 billion. So the shorts are starting to appear here to pave a path up to 24.8. Like that's really what you want to look at. Like the reason why people were calling for 10K, like let's go back in time. Like you have this double bottom at 19K or 18K rather that induced a lot of longs, and then the liquidity grabbed it all. Like there's 2, 4, 6, 8, like about almost $1 trillion that they took in that gap down of long liquidity, of sell side liquidity, and then it meandered along while it developed these pools to the upside, and then in January it just shot up in the shorts face. So it's like everyone was bearish, so that means they're wrong because the majority are wrong. The market moves in the direction most liquidity lies most of the time. So most people were calling double bottom is in over here, and that's why it went and just liquidity grabbed them, and then everyone was like 10K is imminent, and then it just went and short squeezed their face off. And so we're at a really weird precipice because there's pools down below, obviously, and there's pools starting to form above. So that's why we're kind of in this ascending channel of sorts. It's a kind of make or break thing. Like I had these kind of diagonal fibs and stuff. We're trending up in. Let me turn off the indicators to make it less busy or whatever. But yeah, we had this ascending channel from that liquidity grab, which implied where we would go if we went to the upside. And I had this back since January, and we were in this ascending channel and broke through to the 618.5 region and broke down almost to the 236. But we've been kind of respecting these levels, and we've been respecting the 786 rejection here for like 11 days, and we're just trading off the 706, 786 level here in this ascending channel range. It's pretty interesting, but I was looking at this fair value gap at 29.7 to 29.9 as like, you know, if it continues where you might see some kind of like pullback if it continues, but frugally like 29.4 seems to be like that pocket of liquidity that's thicker on. Let's go to that time frame really quick. I think it's on the 6 month. Let's go there. Yeah, so the 6 month has like 75 billion at 29.4. So right here on this external liquidity range, it's telling me it favors that price tag. And beyond that, at 29.7, it's like a little bit less. So I'm more frugal in my prediction. So 29.4 just seems like the juicy target right now, which is why I kind of like entered along there. It's kind of coming back to my entry though, but so yeah, you could take it away right now. I think that's about it.
I can dig it, brother. Very nice info, my man. Very nice info. Yeah, man, I agree, man. We do have a lot of, like I said, man, just a lot of sell pressure in that 29 area. Um, I mean, it's still looking good, right? Still looking like it can definitely still run up there, have a nice little trend going. We're gonna see what this week has to hold, man. Even with so I was looking at SPY earlier as well, taking a look into our stocks and everything, and boom, right? Like if you kind of zoom out, what do you have? Almost a little nice little double bottom going over here on the daily. Just like a nice little W pattern right into our supply zone, man. And look where it stopped, or was it Friday? Right at the fucking, and we've had this zone drawn out since way back, man. We've had a nice little, we even built a little new one right here because it had so much trouble there before it came down, but it's looking fantastic, man. So tomorrow, next few days will be crucial. We're also at that trend line, right? We also did break that, right? We broke the trend line. We thought we were looking like it was might head still into this nice little bearish channel that held for so long. Remember, we counted it out the last few Monday preps and stuff, and we were in this channel for over a year, man. So the fact that we're still breaking out of it, retested, gave us that scare that we can go right back in, dude. However, we've had a nice, and I mean a beautiful reaction to this demand zone right down here, forming that double bottom. Nice little W figure, double bottom into resistance. The next few days will really determine if we do start seeing some nice run. And of course, you guys know how I feel about both markets, right? Like they hold they go walk hand in hand, man. Whenever you see SPY running beautifully like this, you'll see our market doing the same, right? So my indication is, and of course this is my theory, that if we do break this nice supply zone on SPY tomorrow morning, hopefully this week, right, go back into our daily trend line, hold, break. Next wall would kind of be looking at on SPY. I want to say it would be with a 417, 415. We can see some strong runs, man. We'll see Bitcoin take a nice run up, get out of the zone finally, right? We've been in this zone for a while now. But we can definitely see her run into the 30s, man. And if I'm telling you guys, if our market, if stocks start do well like this and holds its own and starts seeing some green days again, like we just started seeing in the last few weeks, then you'll see crypto follow, man. You'll see crypto continue here. Nice little trend. Even if it does break, man, we're still holding nice support, right? Nice little support right here. Look, even if I move this line, right there at the 26.6, man. We still have a nice strong support there. But hopefully this week we'll see how SPY reacts. Come back and check on it tomorrow again and see what kind of week we have for the remainder, man. But it looks good. I mean, besides consolidation, right? I always tell you guys whenever we have a run up like this, consolidation isn't a bad thing. As long as we continue having higher lows like we've been continuing to have, and mind you, this is our main trend down here. We still have a lot of space for that to come down. It did it before, right? We did it before. We hit a nice strong supply zone, came down and strong for a few days. However, look how the reaction. That's bullish. That's what bull markets do, man. That's just a sell off. So expect them to sell off here soon, man. It could be in these 29 range. I mean, we keep rejecting right above it. We're there now, right? Like it's crucial, man. I really feel like the next few days is gonna be really crucial. I want to see either break from here, maybe a nice little few days of red, we can use it, right? Like it's not a bad thing as long as we continue to hold this trend. We have space, man. We have more than enough space for this to even sell off. Have higher lows, right? We'll continue to have higher lows, and all that's gonna do is just give her even higher highs. And slowly but surely, we'll continue to grab, higher highs and continue to go on this nice bullish run that we've been doing for the past few weeks. I want to say almost a few months already. Um, you know, anything is possible right now, guys. Literally, man, anything is possible. But I'm shit. I want to say that I'm kind of bullish as long as we continue to hold this. Dude, if we break, I am gonna probably try to short this, even if it's a short from here to here. That's 100x scalp. You guys know how I like to scalp these things. That's look 400%, almost yeah, about 400%. We can even scalp that from here to there, even if we do get a nice trend break. So I already set my alert earlier for today. I mean, excuse me, I said it earlier. On a 5 minute, the minute we get a nice 5 minute breaking candle under this structure, this line, trend line, I'm gonna call it out and probably jump on a short. Um, but still, we need to find it, right? Like we still need to kind of get that break. I think we starting to see nice support right here. So I definitely want to see this right here too. Right? Support there, 27. So even though break from there to there, I want to say it's still almost 100%, dude. Yeah. Look, about 134, 134%. So even if we get that break from here to there, that would be the next support. That would be one of my TPs right there if we get on a nice short from here to there. If not, obviously, right, and that's just short term, man. Long term, it's the structure right here is the only thing that has me really really doubting the long because just it's keep rejecting, right? Like we have one, two, three, four, five, six, seven, almost eight strong rejections. Not strong, that strong where it kind of knocked us back down, but it did sell off, right? And we keep tapping at that resistance. So either we get a nice break soon or just another rejection and we start coming down. And again, not a bad thing, considering that we've been running for so long, and we've been having a beautiful run. I want to continue seeing this run. So sell off here, for a few days of red wouldn't be a bad thing. If not, you already know, guys, bullish to the end. I want to see 33, 35, 36 hit. We just got to break these levels, man. I want to really, really see us break this 30K right here. And I'm going to put my alert on that just in case. But I really need to see that break right there, man. Once we break that, oh man, I think we're really gonna go for a nice long run with Bitcoin. To where God only knows, but it'll be a strong, really strong sign that things are looking good again. I mean, look how fast we came back up to these. Took us a whole year to go from right these levels back down, to fucking the pits of hell 15, and look how quick it took us to get right back, right? Almost back at 30K. So that just shows you how strong, man, our crypto market is. Again, I'm always gonna say that I really don't think crypto is going anywhere anytime soon. So anytime we do have these nasty sell-offs like this, guys, invest long term. Like I said earlier, I do want to have us give a class on how to secure your crypto, man. Show you guys how to throw it in a ledger. Like I said earlier, I threw mine in a ledger this week. will continue to plan on adding it, right? Every time I see these nasty dips, right? I want to see a dip from here to there. That would be sweet, man, because that would just only make me look for another coin, sand, any one of these guys. I mean, shit, if you've traded crypto for more than a year, you're going to see a lot of these names that they're still here. You just got to do your homework on which one you really want to invest in. But, look into your AI coins, right? Look into your NFTs. I think I'm not really strong on NFTs. That's not my suit. um I said it before. I felt like it was going to be just a fluke with that, something popular for 1 minute and then die off, and it kind of did after the market shit itself. So I'm not really big on NFTs, but still is a shit ton of just different investments for you to throw your crypto in, right? So do your homework on these coins, man. But just off the rip of me trading the past few years, I can just name off a few, right? Like you have Dot that's been in for a while. You have, ETC, good one to throw in. Phil's been around, and if you want to get your under a dollar coins, I mean, those are the ones I like to invest in, right? Like, look, you still have Kava. Kava went on a fucking strong run not too long ago, right? Still, holding support. Is it? We broke above. Okay, look, bam, there we go. Let me put this on the daily and the weekly and see what we can see. But there's a lot of choices still out there, guys. Now we would have to look at a Binance chart to see the complete one. This is only a big get one, I think. Yeah, nice little breakout from here. Continuation. There's a lot that you guys can still invest in, man. It's not too late. If our market went from where we're at now, 15K to damn near 60K, right? Like, and we're only at 28. That's just telling you guys that we still have, this is our potential still, man. Hold on. Yo, sharp, sharp, sharp. You want to mute yourself, man? So yeah, guys. Again, it's not too late to invest in any of these coins, man. Still plenty of space, man, right? Like, look where we're at now. Look at the potential. We've fucking been up here twice. What's not to say that we're gonna go right back in there. And again, look, we're coming right back to these levels, man. This is big right here. Once we break this level and we can do that hanging around here for weeks, as long as it continues to build up the way we did before, then these, it's just a matter of time before we either make new highs or, continue to ride back into these 40, 50, 60 levels again. Which, if you're buying here, right, any one of these, I mean, pick pick your favorite. I threw some money in SHIB. I got that shit in there too. I threw some money in Doge. Why not, right? That's the fun money. That's the money that you don't really care if you lose. But hey, if SHIB has a nice run, which we've seen it do plenty of times, if Doji has a nice run, which we've seen it do plenty of times, then I'm gonna look for a payout, right? I'm gonna try to double, triple, quadruple my investment, and if it gives it to me, I'll take it out, put it on another coin. No, other than that, then like I said, you got plenty of choices, man, to invest in that are still under a dollar. Sushi's another one I would throw some money in. XLM has been around for a while. XRP is, I want to throw that into that category of shit coins still, because it just always has some news. I think one of our top analysts is analyzing it as we speak, and he was telling us that they have a court case coming up. So you don't want to play with ones like that, right? Seriously, where you're kind of really investing, your long term money. However, it's like a Doge to me, man. I throw a few hundred in there and see what happens, right? Like, if it plays out, it plays out. But again, with a risky one like XRP, all it takes is one bad court case, and it goes, and you'll see Luna 2.0 happen, right? You'll see it go from wherever it's at to pretty much nothing. So, risky one, that XRP, man. I really don't like telling people to invest in it long term. Um, and if you do, just be careful. That's all I say, right? Like, but other than that, it's been having a strong run. I mean, look at it, dude. It's been having an amazing run. It's not breaking. This is a demand zone that we had for it long time ago, right? It still hasn't broken. And look, that's how old it is, because it's still in freaking white. I usually have my demands in green now. If it'll change. Come on. I don't know what's wrong with this thing. Um, but yeah, still strong demand zone right there. And again, we just rejected our supply zone not too long ago, literally a few days ago, right? It's kind of spiked up above it, but it's still holding, man. So very, very risky one. To each his own on that one, on the XRP, because that one, again, just all it takes is one shit court case, and this will drop to help, man. So very risky one, guys. Other than that, let me see. Ethereum, like I said, I think I was touching on it earlier. It's still pretty close to resistance, right? Almost looking like Bitcoin, but not. Still not looking too great as well, right? Like this one is kind of still a nice downtrend. I want to say like this, having lower highs. We do got an uptrend working from that corner to here like this, right? So still in this wedge form, right? Still want to see something really move from here. I don't like where it's at now. However, if it continued to give us lower highs, this would be probably a pretty fucking great short. I mean, you were at that trend line resistance, right? If you see it, right, you can kind of see it rejected once, twice, almost three times, and this is a daily. And the third time is really where we're starting to see some red come in. Let's take a look at a 4 hour, right? So now you got something like this going on. Trend break over here. So same thing, right? We kind of almost got the same thing going on with Bitcoin, where we kind of looking at a nice trend line to see if it can kind of break to jump on a short. Maybe if we get a nice break on one of these trend lines, you'll see some red come in the next few days. We're at resistance in a lot of these guys, so don't be surprised if we do get a nice rejection. Lately, the trend has been, Sundays has been days where we've kind of seen nice rips, right? Watch it, which is why I really wanted to do Sunday prep. I miss it. But Sundays around 8 o'clock my time, which is again another like 2 3 hours. I think I mentioned it last time or last week, and one of the guys tagged me. Oh shit, Kenny, look, bro, you fucking mentioned Sunday run, and the market happened to run up around 8 9 10 o'clock, right? So it was crazy, but that's been a trend that I've been noticing, right? So however, like where we're at right now, man, I see a lot of resistance points here, man. Like, right, like 1 2 3 4 5 6 rejections, 7 8 9 10. Like there's a lot of resistance here, man. So you really want to see this, right? You really want to see a nice break above this resistance supply zone to be able to look for a nice long on a breakout trade there, or try to grab that lower high, right? Already gave it to us there. We got a lower high here. Maybe try to grab it here. Let me see if I can find a demand zone on it. I want to say maybe about here. Damn, why is my shit not changing color, dude? What the fuck? Uh, So, something like that, maybe look for that long. But again, even if you grab that long here, you have that risk of it just breaking trend, right? And again, just because it breaks trend, nothing is 100% in this market. Doesn't mean that it's exactly going to go down to shorts. How many times have we seen a nice break, trend break like this, break, retest, and then boom, fucking fly off and give us higher highs and stuff. So, but it would be a good one right there, man. I really do like this one, and I already have my line on Bitcoin, which I will be following today to see if we can kind of get a short on any one of these puppies, man. Um, this week I want to say I have my daughters flying in from Georgia, man, so I'm gonna be pretty busy this week. Don't think I'm gonna be trading that often. However, I'll reach out to some of the guys to see if we can get some lives going on for you guys. Still keep you guys entertained with some nice traders, doing what they do. Like my man Brian, Illuminated, is impresses me more and more. And he promised us he's gonna teach us the cheat code, guys. I know my man is gonna deliver to
I
his
can give
word.
you that right now, a
Huh?
version of that, a
Oh
free
no, dude!
one.
The more you teach it, every time you bring it closer and closer, like I pick it up little by little. I'm like, all right, I like this. All right, I like this. So, dude, the more
So if
you
you want to
again,
look,
man, that's why I like when you go on live, man. We all learn, and I like it, dude. Like I really starting to like those order blocks. I'm starting to understand it more, right? Now
right,
question,
it's
now
just a
question,
game of tug of war, you know.
now question, brother. Is that considered ICT? Is what you're doing? Like, what category does that
I
fall
mean,
into?
so I mean, I believe the smart money concepts go over like buy side and sell side liquidity, right? And where these order blocks would exist, and they use fair value gaps to kind of guess where those would occur, right?
Mm-hmm.
All right, so if you look at my screen, I can share two free indicators that you could get kind of these concepts in your head without paying the $70 that I pay per month for this bad boy. But you like basically, first one is the fractal fractal break imbalance fair value gap / liquidity void, you know, indicator here, and just I do default here with show balance breakout imbalances and other imbalance. And so what that's going to do is if you look to the left, it's going to show you where it didn't trade fairly by drawing a box around that candle. I don't know why it's not drawing it right now. Hold up. So it should draw a candle, a box around my. Let me turn off everything, just deal with that. Why is it? Oh, there we go. I mean, it's showing on one thing here. So I'll just go to a higher time frame because they'll actually have it in more prevalent. So, for example, this hourly candle here has a box around it. So this zone is a fair value gap, and that's from March 29th. And on Friday, I think this was Friday, yeah, my time, I was seeing a 618 rejection off this impulse to the downside, and we got rejected there, and I shorted it down to this gap. So, I mean, this gap was already recovered as of this candle here, but this is what fair value gaps are about. And if I was looking at liquidity pools, I would have coincided that with a stacked pool of longs that is growing there. And so that's what fair value gaps and the ICT concepts are about, is like a lot of assets like the S&P and stuff, you can't get a liquidation level. You just have to suspect based off of the inducement of this consolidation and where that might lie based on how they repriced the asset with this fury here. And so that wick to that region and bounce up here was just a recovery of the fair value gap. And most likely, if you use even fibs, if I took this impulse to impulse, yeah, that becomes a 618 bounce too. So you get that confluence of the fair value gap plus your golden pocket bounce, and you're golden. And that's also why I went long here too, because it was just like I had shorted it down to a confluence region and then took my profits and switched position. So that's kind of cool. But yeah, if you use that, the high block thing, that's one. And then the second, the fractal break imbalance will give you those fair value gaps, right? And then if you use this liquidation levels, which taps into the order book or the API data for the exchange, it says it up here, Binance Open Interest Data up here, top right. This is by ML Applications, Liquidation Levels version 2. I set the threshold for 0.1, which shows each 100K trade. And so, it looks like it's taking a dumperoo to liquidity grab these guys. So basically, this is a perfect example to see how it works. So we're breaking the structure here, and this is like a liquidity grab to take out the pools that developed here. And this would be like a perfect entry if it coincided with different levels here on your fibs. If you were seeing the liquidity grab, this could be a V-shaped out of here. And this basically tells you the positions of people and where they enter. So this dot here shows you a 260K trader at 100X that opened here, and his trade was open until they got liquidated on this candle just now. And so you can see their lines getting cut, similar to what high block does. So it starts to induce these pools, and you can start to see the pools develop thicker to the downside. So I was short from 28.7, and I was riding it down all weekend. And safely, I was seeing more 100X open below. and I was seeing other indications on my indicators about weakness being expressed, so it just came down and ate those pools. And so it looks like it's still trying to knock out these 150x characters. And yeah, this is the free one that you can check out. So you can basically, I look at it on a 15-minute time frame and below. If you go above, the cache gets wonky and it doesn't show you like everything that's there. So I find it to be most accurate on the 15 and below, like going to a 5-minute time frame here. So you're getting these rounded tops. So that was kind of showing some fatigue here on the 5-minute. And they just went and grabbed these induced 50x guys. So all of these guys just got gobbled out and stop hunted. And that's knowing where these traders open their trades and where it's stacking, you can compare like which one has more. And then based off of that, you can kind of feel at ease with it coming to eat the 100x or not. And they basically just swat off 100x all the time. So they take the 100x here, then they take the 100x there, and then they take the 100x. And it's just the oscillations of price are just swatting off 100x traders. And here it tapped into 50x, and you're getting these buyback by the exchange of their liquidity. So that sell side liquidity is them repossessing and buying it back. And that should spawn some divergence of some kind. And you start to see divergence form. And that's where you form your entry idea off of if your Fibonacci coincides and levels and whatnot. But yeah, that's kind of what I look at when I'm looking at this too. This is just a more conglomerated image. So they went back and more accurate because it's uneditable. So they went straight back into these pools here and grabbed this 194 million 50x here and this 179 million 25x here. So we're a hop, skip, and a jump from this pool down below now. But you're also seeing 178 million in shorts opening up here, these the breakout short traders that they V-shape recovery and eat a lot of the time. So you always gauge over here how many are building on the opposite side because it could just be a stop hunt drop before it surges. This is also the Asian session for False Move Monday, so a lot of like wonkiness occurs to gobble the most liquidity before the week kicks off on Tuesday and Wednesday. So yeah, I mean, that's basically, I use this to accurately gauge these pools that they pull back to and start to see these like pools thicken for regions where if on higher time frames they're also there, then it becomes like a point of interest. So that's how I view the liquidity. And it's basically the same thing that the ICT guide does, but they're just drawing like simplified boxes and they just like write sell side liquidity, like, you know, you do something like this. And they just say like sell side liquidity pool, you know, like your order block, or you could just say order block or whatever. Bullish order block. So the bullish order block is actually the dead carcasses of the bulls being repossessed by the exchange, which causes it to go up and get the shorts. So really what is causing the price to go up is that they've killed their target and now they're aiming at the other target. It's not that their bulls are showing up to rise the price necessarily. It's the exchange going to eat the other side. So your side that you bet on, let's say if I'm a bull and I'm buying for Bitcoin to go up, I'm basically going against my position. It's kind of like a game of tug of war. Like the more guys on your side, the more likely you are to win the game of tug tug of war, which means you lose because you will pull the price action towards you. So the minority wins all the time. So you have to look where the minority exists in terms of these liquidity pools. So yeah, that's how I view the price action. And we're currently in this what's it called? Like false once again, the Asian range likes to dump it a lot of times. So we're in Asia right now, and they look like they dumped it for that liquidity grab. And so if you weren't in a trade, then shorting it as they grab liquidity is not my personal style. Like
That's like chasing.
I wait for the liquidity grab to go long actually. So I wait for these pools to get cleared and then expect it to go the other direction based off of looking at how many shorts open here and seeing all these bubbles of short liquidity becoming targets against their position. So, yeah, that's about it.
It's a nasty drop, man. Shit.
Yeah, that was pretty nasty.
Pretty
I was
intense, man.
looking at this yesterday. I was like going on live saying that they could come down to these guys too, because that is a 25x and 50x character down here at 2766.
Well,
I conservatively exited on this dude here, but yeah, that was a pretty bad drop. But I mean, it's all like relative, right? So if you look at these pools on the 1 month time frame, for example, and this is where you get into internal versus external liquidity, because then the pools start to differ in terms of like where are we now. So you do have these pools down here like 11 billion at 27.4 that it could bounce off of, but after it bounces off of that, how much more do you have below at 27.1? 5, 2, 4, 1. It's getting thinner. And then you look above, you do have slightly only a billions here. But then that's what causes the price to just spike up or spike down. They skip these gaps to try to like aim at a pool which is juicier, which has like 19 billion at 29.4. And we already talked about how that 19 billion on this monthly time frame on the 6 month is like 75 billion. So if they go down to 27.1, they get 12 billion plus whatever we were looking at on the 1 month time frame, which was like 4 billion. So that's like 19 billion, as opposed to go here to get 75 billion. So this to me looks like a liquidity grab before they go here to induce some shorts, like to pave a path to grab this. They need some dead set short liquidity to stay committed so they can go back to this. I'm not really bullish or bearish though. Like I watch it level by level very carefully. This is a hop, skip, and a jump from here though, so you could come down to this even and get all these guys. I mean, there's no guarantees in trading, so it could come down to these pools too. But
Say that one
overall,
more
like
time for them. Say that one more time for them,
there's
please.
no guarantees in trading and there's no guarantees in life.
The
So,
only guarantee in life is death. That's it, bro.
yep, and taxes.
And tax, which causes death, man. So
Yeah. But just looking here, like on this 6 month time frame, this is the external liquidity range. Like this is why we tap into it. Like many times when we were here, so when we were bearish down here, which also was a 618 of this impulse up, so that was a rejection point I was seeing. Granted, we did have these pools below, like juicy, 200 billion pools that we could have come back to, and I was aware of that too, but I was like also saying, at 25 on the yearly time frame, there was nearly 200 billion up here. So when everyone was bearish as this Silicon Valley Bank was failing, they surged it up and no one entered. There was no liquidity here. So there was no longs actually pushing the price up. That's the exchange, the liquidity provider, whatever you want to call it. The price algo, like it's moving up to grab this while they're in shock of like, why isn't it going down further? And so these guys got lucky in terms of just escaping their doom, but they're still juicy targets. But there's a relative like gap here. I mean, 43 billion is a lot of dollars, but if you go to like the yearly time frame, this is where I start to like feel weirdly like, wait, what? Because like I don't want to say bullish, but you look below here and I see like 50, 70, something times zero and stuff. And then I look immediately above and I see the same thing forming, like 50 billion here and 70 billion, 60 billion, uh, 70 billion. And also, mind you, we have these liquidity pools from June of last year, like that are in the 84 billion range. So these are still marionette strings that could pull us to the upside, you know?
Mm-hmm.
So all of these short pools from like 50K, some people are still open. And then if you look below, they did leave that 15K intact, and that's 200 billion now. So that's a large target. But once again, this entire price action to make a big move like that is so insane. So, you know, there's a long way to get to either of these. So that's why I look at it. I look at them as interest points or like weights pulling against that direction. But in terms of, I look at immediate things. So I was looking at that 29.2, and then when we hit 29.2, I was like, all right, we're going to probably pull back because it's thinner up here. So as these pools thicken, I'm looking like very frugally at like 29.4 now. Like, okay, that's a good point to hit. And I think that's why we're trading in that ascending range. We're like tapping pool after pool after pool after pool. And it just happens to be ascending because there's more shorts opening with this I can't believe it mentality. And it's making these pools higher,
So real
you
quick,
know?
where that 30K is, right where your mouse was, right? The
Yeah.
light blue. That's all shorts, right? That means that what is it?
Hmm.
30,000, right? Where's the money? What was that? 7. So all that is all
70 billion.
70 billion. Jesus Christ. So that's all in shorts. So it wants to hit that and then come down,
I
or
mean, there's want, I don't know about if it wants to, but you just compare what's below versus what's above
okay.
on this time frame. So at 27.6 there's 16 billion, at 27.2 there's 24 billion. There's 8 billion and 15 billion just above us, which is
Mm-hmm.
decent.
Mm-hmm.
And you know, comparatively you could come down to 27.2 and knock out that 24 billion, but beyond 27.2 it gets sparse. You get 7 billion here. So like, would they come down here and then shift the interest? Or, you know, you just take it one gravitational point at a time. And right now, that 27.6, for some reason, it doesn't show 27.4 here. You have to go to the 6 month. But if I go to the 6 month, here, it'll look more apparent. So it's hotter, right? You have 75 billion at 27.4 and then 18 at 27.3. And it is kind of sparse here, but overall, on a grander narrative, it's showing like it wants that because it's getting hot.
And that's why you said you're long, right? Like your thesis is that
For
it
now,
goes up,
yeah.
yeah,
I
to
mean, I
grab
should have
that.
set it at break even and looked for like a better entry point, but I mean, yeah, I was indisposed, but
No, no, no.
yeah, I
I'm
already
trying to
made.
understand this exactly, and I see now why I know. And again, I mean, it's not a bad long move. Like you're at a strong
but
support, we're near a
but yeah,
strong
it's like
demand.
I already made like, you know, here's the receipts just so you know I'm not like make like a bullshit artist or something. That's yesterday's trade. I got 288 from that. So I don't mind if it chews into that a little bit. I'm kind of like just playing an idea here, but
Yeah.
yeah. But it's so it depends on how much they induce here for shorts. Like you look at here now, okay, how many longs are going to open? And if you see these 100x opening up longs, seeing this as a juicy level, then it creates that bear flag, whatever you want to call it, to go grab them again. And if there's shorts opening here, which it doesn't look like there are, then it would come back up to them too. So the thing that I use this free one to see the immediate trades of the Binance chart. The Binance chart has the most liquidity, so I just use that to measure.
Yeah. That makes sense.
So yeah, I mean this has become a gap now. So in terms of ICT concepts, this is what the fair value gap is. It's the repricing to grab liquidity, and then that creates an unfair trading advantage for those open traders that are resting easy as these bubbles. And so those bubbles here, this 58 million, 39 million, 128 million, 178 million, these ramen noodles, as I call them, to the left here, right. So if you look at the right side above my head, you'll see this black line, and that's where the current price is. And then you'll see these noodles of shorts, these bars, and that's volume. And if you look immediately where we're at, there's not really much below the current price. Granted, there's stacked liquidity down here, which is juicy, but as in terms of just your retrace into the gap to drop lower, it would ideally knock out this 2788 character on a little scalp play before continuing lower if it intends to go lower. If it intends to come into this pool, then it would at least knock out these 100x, because these are 100x traders and they don't want to pay them further. So they would come up to go down if they're going down. And then this is starting to pool nicely here, so they might leave that here and then continue to knock out this pool. So the actual long might be after clearing this pool in retrospect as they made this move. So they might come up to here. You consider, and that's where you consider shorting on liquidity grabs. So you would have considered longing off of this liquidity grab, which would see a bounce, a cash out of shorts, eating the new shorts, bounce up, and then it might drop back down into this pool thereafter. It's just a constant juxtaposing of these bubbles. And it's kind of like a cheat code because you're not supposed to be able to see this easily anyway. I mean, the market makers obviously have better tools at their disposal, I'm sure, but this is what the fair value gap would be. Like there's 178 million in 100x shorts sitting there at 2788 right now, which it seems to be gravitating towards. Before it goes lower, I don't know, but you take it one step at a time. And that's how I tried to avoid like bullish or bearish because of that. I looked at this target on Friday actually, and then the reason I opened up a short, I'll show you why I opened up a short actually. So I saw that guy, and then at 194 million at 100x here, and then I was like, up here I saw these 179 million opening up at the breakout at 2877 after they had knocked out all the 100x here. So it was a no-brainer to short this, and then I took some profits and then let the runner go all the way down and over the weekend and just let it come take out this third guy. Or it wasn't the third guy, but it was actually this guy. I should have waited, let it come back to this guy, but I was coinciding it with the fib bounce, and then I took some profits off that. But yeah, it's a game of traps is the best way I can put it. It's like a platform jumping game like Prince of Persia, and if you stay on the platform for too long, it'll drop you into the spikes and kill you. So you got to always like pay yourself and protect your entry and like reward yourself. And if you have profits to burn, then you can sit in a negative trade, but don't get you in that habit
Mhm.
normally, you know.
Mhm. Mhm. Yes, sir.
And having the ability to DCA is a good thing. Don't go all in.
Mhm. Yeah,
So if I if
that
I
shit
see it
makes.
come up to this, if I see it come up to this dude that I was just talking about, up at the fair value gap at 28 27.88, I might just like close it at a loss there. But that's why I didn't immediately close it as it dropped, because they generally come gobble up the late shorts, the breakout shorters. So I can consider closing it here if it doesn't, if more shorts don't enter to pave the way back up to here. So the immediate price will tell you where it immediately wants to go based off of, I call it ramen noodles because I look at the gaps here in on the right as broth. And so if there's no broth, they don't want to just drink the soup, they want to eat the noodles. So the noodles nearest by are up above. And then you start to see stacked noodle pools and you're like, I'm hungry, bitch, and then they go eat it. And so now you're seeing this kind of bounce out of that region. And that's why if you coincide the liquidity grab with your entry and some fib levels, and you weren't in a trade right there as it drops, then you can kind of expect a V-shaped recovery of some way, shape, or form. And then at the bare minimum, you can protect your entry. And then as you watch these 100x open up, you realize these are actually dead weights that pull the price down. And you're like, stop opening, if you're wishing it to go up. And if you're short, you're like, ooh, more targets. And he closed his long and switched short. And so if you see these shorts opening, if you're expecting it to go up, you're happy to see shorts here because they're tug of war players pulling it towards their liquidation point. And that's the kind of conclusion I've drawn by studying all these smart money concepts and kind of like using these free indicators and paid indicators to kind of like get a sense of these pools rather than guess. Like you can guess and you can use fibs and you can use fair value gaps, but you can also, thankfully, because it's a blockchain, you can see these actual trades as they open, which is, like I said, kind of cheating. But I don't think there's any problem or regulation against it. So, but in terms of like, yeah, the regular stock market and stuff, it doesn't work. So you have to kind of use you have to know how the concepts work for regular stocks. So, yeah, I use this original indicator that kind of like expresses fatigue on multiple time frames. So you can kind of see where when you break structure, like for example on the S&P, if we go to within structure, you had a rocket ship of multiple, like that means like 6 or 7 time frames oversold on multiple indicators. And if it's within this structure, then you start to go up. And if you're within a structure and the nuke appears, you go down. So you had these rockets that play out and at least protect your entry. And within structure, you fail. But as you break structure, when I was seeing this inverse head and shoulders for the S&P, we broke out. As you break structure and you start going into price disco or like trying to bullish territory, like you don't take these nukes, you just monitor them as like we're overbought. But yeah, so that's kind of like a multiple time frame thing that I've developed that saves me time of looking between time frames I can immediately assess, and then I got this little screener here, so I can be like, the 5 minutes overbought, the hourly and the 4 hours overbought. You got 6 time frames overbought right now as you reach into the trend-based fib level for that bullish projection. So people are going to start taking profits here. So you're either going to see a kind of like retrace into the gap and bounce off this 786 and then maybe come back here. And you can at least like predict almost instantaneously where it's going to go, or like stall out or something like that. And then at least take like a few contracts, scalp, and protect your entry. So that's a pretty cool thing. There's other facets to this Momentum Master indicator, which use like crossover events of these leading moving averages, which start to tell you that fatigue is setting in. So you could like scalp these. I have some guys that I know that have gotten funded using this alone, and they trade like micro contracts on under sub 1 minute using it. It's pretty cool. But they take these crosses and then they play the momentum up and down, and they just take these little micro scalp plays for like 0.25% here and 0.25% there, and they get out on each crossover. It's pretty cool because it's leading, so the event happens before it drops. So I make these DNA helix. So we're seeing that 6 time frames oversold. You could surge up to kind of start to recover, do that false move Monday will have you. We can look at the actual data action. So where are we on the actual ESM, right? So we're kind of getting a crossover event on the hourly, which would suggest we are going to reset that hourly time frame. I think it crossed an hour ago, so that was locked in. So you could see the hourly come down to at least one of these levels, like the 1382 of this bullish trend-based fib level, and kind of like recharge into an order block. So the reset of the hourly and bounce off the cloud here is not an absurd idea to think about, having this crossover event. And the 4 hour would show you you're at the outskirts of this ATR based Bollinger Band like channel called the Keltner channel. So you could be at the outskirts. In bullish times you can recharge off of it and bounce off it, or you could fall back down and kiss this cloud, which would be coinciding with the bullish trend based fib level of the 1 on there. So you could look for that pullback and then come down to here perhaps before bouncing. But in the interim, probably a slight pullback into that region is what Bitcoin's kind of absorbing right now as an idea. So, yeah. What are you looking at, Kenny? You still there?
Yes, sir.
Oh yeah.
Honestly, I'm not in any trades right now. I'm gonna look at, actually no bullshit. I was looking at Ethereum, man. I wanted to short Ethereum, but after that Bitcoin drop, you know. And then again, just like you said, there's a nice little buy zone right there where Bitcoin just hit. So, shorts are still not looking good. Long could be really nice from here, to be honest. Nice little scalp. Um, and then I don't know. Right now the
So this
market's still
cloud is pretty thick right here. So it's like
yeah.
chances are it rejects on this cloud and then continues lower if it pierces up. But at this time, I was expecting it to bounce up a little bit more, but it dropped on me. So I'm trying to think about this liquidity to get out, but could surprise me. At the bare minimum, the scalp up to 27.8 might be the reasonable idea to think. So you're looking at Ethereum? Let me look at Ethereum
Yeah, check out
with
Ethereum.
you. So you're getting a crossover event on the 5 minute. So this is how you can get like how scalp plays develop. Like you're getting the baselines, which are the leading moving average formula to cross. Now, if it closes a 5 minute candle in 2 minutes with this DNA helix intact at the bottom of this Keltner channel on the 5 minute, then it's likely to go up further and until it at least fatigues on a cross down level. So you had this one cross up and then it went up and then it crossed down and then now it's crossing back up again. And so there's dudes that use Momentum Master that just kind of like play these all day. And they just like do that on stocks and they've gotten funded and are just like laughing it up, doing it for a few seconds with 10 contracts and shit.
Oh,
So it's real. It's not like a latent average. It appears here and then you take that shit down and then it appears here and you take that shit up. Sadly, I was on a phone call or I would have been more able to monitor my BTC trade and not be in the negative right now. It's like doing like a negative 170 now, but when it gets back to this level, I'll consider just closing it. But yeah, it's this cloud being thick and this ATR super trend tells you what you need to reclaim to be bullish on this time frame. So for
hey,
Ethereum going up here
take a look
and
at Ape.
getting
Take a look at Ape. Sharp is asking to take a look at Ape. He says the 4.20 range for a long play to the 4.285 if you had to give it a peep.
so the yeah, it looks like it's trying to reclaim the cloud here. If it reclaims this cloud and this starts to cross up, then you could see that play out on the 5 minute. You got the weighted and the adaptive moving average in your favor too. This looks really nice because you got these support structures that were previous resistance that we came back to and we're trying to like bounce off of as support. So previously you had resistance on this adaptive, you broke through it, and then this, if you go to this fib level, you went into that pocket region, and then this is like a 786 bounce, and so you're starting to bounce out of here, and this could be your like retest region. You got the hourly still with momentum, the 4 hour, the 15 and the 5 are kind of in already starting their move ambiguous place. But yeah, you're getting the leading MACD cross too. This is a leading MACD formula that traverses both domains here. So it's more sensitive and it's already crossed here on the 5 minute. So you could see this play out a little bit more. But if Bitcoin will play ball, Bitcoin needs to go sideways. Like it's all like, you know, up to Bitcoin, unfortunately. But the one cool thing here on the 15 that looks nice is you have a thinning cloud. So you had the thinning cloud here, which shows like selling pressure has waned, and then you're trying to kiss that cloud to get that order block bounce out. And it's still kind of thin on in purple, but it's heading up, but it hasn't turned to blue just yet. Let's look at the hourly. Oops. So the hourly time frame, you had this previous like cloud resistance that we hit and pierced at the ATR and got rejected. So if you were playing that risky Keltner channel game here, you would have been able to ride that to the ATR and reject off the cloud based off it being purple here. So you'd want to see this reclaiming of that bullish area up here and holding it if you were going to go higher. on the hourly time frame. The hourly time frame is just getting started in momentum. You have the Williams starting to cross as well, and the MACD has crossed, so you got that bullish cross of the MACD and the Williams, and that's in your favor. So I see what you're seeing with for Ape. It looks like it's got some healthy momentum going up for it. Also, one cool thing is like you get the money flow beneath the RSI. Here in gray is the money flow. When the money flow goes beneath the RSI, it tends to go back up to the RSI. Similar to here, you had the money flow beneath the RSI and then it surged back up to the RSI. And that was right here. So it goes up from there. So the disparity between the money flow and the RSI is something to notice, which is why I overlay them like that. It's not just to like look weirdly like complex. It's like actually has a meaning. So you had this like money flowing beneath the beneath RSI. The money flow index is actually called the volume weighted RSI anyway. So comparing the RSI to the money flow index is going to give you some interesting ideas, I think. And so if we go to a lower time frame with that in mind, we can see how the money flow is going. It kind of flowed above the RSI, which is what, and you got overbought, and that's why you came down. And so now you're kind of curving the stochastic off the leading MACD, which needs to cross up here, and the RSI needs to come back up on the 15-minute for this to be valid as a long. It's getting resistance on the weighted moving average too. But in terms of support structures, you got the cloud, you got the 618, you got the adaptive, you got all these things on your side in terms of what people would be interested to enter on. So you could take your pick about stop loss and then just try to see what you can get out of it. Try to get up to that ATR level here, like, what would that be? Let's see. Like a good 2% or something out of it. Yeah, I can see that. For sure.
All depends on Bitcoin, bro. That Bitcoin right now is looking
If they
scary.
retrace back into that like fair value gap, like let's go take a look at the shorts. How many shorts are entering versus longs? Doesn't look like anybody's showing up to the party any more than that they were.
Mhm.
One thing that's interesting to note is that they held that range after liquidating these 80 million guys. They didn't just immediately go back down to the target down below. They're kind of contemplating whether it's worth their interest to come up to here. And that would allude that they are interested to me if they hold that. And that's what you would see as stochastic resets. So if you look at your stochastic RSI and you like reset a lower time frame, you're getting kind of overbought on the 5-minute. But like if you had an overbought time frame, let's say on the 1 minute, and then this reset, right? And oh, this is perfect. Yeah. So the cloud reset on the 1 minute, and you're getting that ATR slash cloud shift. So this does allude on the 1 minute that you can come up because you reset your probability. The stochastic was overbought, and then it reset to oversold, and you could get that surge up of interest. One thing to note, it was the Williams was overbought as well, but it's starting to curve back up for a potential double top. And so on the 1 minute here, that's why I like this indicator, because it like basically gives you automatic dynamic support and resistance. This adaptive here is going to be at 27,879, and it would likely coincide with this guy, 2888. That's pretty damn close. So it's a weird. The adaptive moving average is this weird formula that removes noise but then moves with volatility. So it's kind of like your VWAP. It's like an adaptive VWAP. So you could come up to that region based off the liquidity in this, and the cloud and all this stuff is suggesting you go up here to that point. And it's just one step of reclaiming at a time and monitoring and trimming. And ideally you don't want to be in any trade while you got other stuff to do. You got to be very hawkish. So this did close with a cross on the 5-minute, which is also kind of bullish, is a leading idea. So it's starting to kind of go up here, and this will express itself. It likes to express itself more times than it doesn't. It's just that's what the formula does. You do have times where it does start to express and fade, so it's not a guarantee, but for it's backtestably true more than it's untrue. So this is kind of an interesting to note on the 5-minute time frame for that baseline cross. If you go to momentummaster.info, you can read about this in more detail. I made a really cool overlay that you can overlay all the indicators and see what each component means, like what are the baselines, and you could just read about that at your leisure. So that's kind of cool. So it basically will reclaim that, and the cloud is thick, so I'm not really bullish beyond, unless we can somehow surge up out of this cloud, which I don't really see happening on a Monday, but for Asia. So coming up to this region, and then what do? Do you go back down to grab that last of the liquidity down here in this pool, this 27K region on the 1 minute? I don't like getting fixated on the 1 minute because it's only a 1 minute time frame of pool. Granted, it's 6 days of trades of data, but that's why I always step into these higher pools and look at that 75 billion at 29.4, and I'm like, the measly 100 million, as strange as it sounds to say, 170 million being measly, but yeah, 75 billion is much more than that. So that's why I entered along, and that's why I'm just chilling, because without worry, because I don't think they'll leave this behind. Personally, I don't see them leaving it. It's too hot. It's like they induce. So if we go back to March 29th, which was like 4 days ago, it was only 57 billion at 29.4. And then now it's up to 75 billion. So it brought in like $30 billion. And do you think they'll just like let it slide and go down? I don't know. I mean, they do have 20 billion down here that they could take. But yeah, 75 billion is a lot of money to me. And then at that point, what does it do? Does it start to retrace? And then you always look at how these pools are thickening. The thing that keeps me bullish is like this surge out was so abrupt, and they didn't want to create pools here that they retrace into. So it's like there's going to be pools when you create a narrative shift that will just be the lucky campers that can remain in the trade. The institutions, the hedge funds that will just camp out here and ride the bull wave up. And then they just might not retrace into this and create a new narrative beyond 28K. Like, you never know. That would be so weird, but I don't even like to say that because it's just been so bearish for the last year and a half, you know? And we got this cloud on the 4 hour that's still kind of green. We got that higher time frame suppression pushing us down. We got the 6 hour. How's the 6 hour looking? 6 hours still coming down by the looks of it. Oh, this is, yeah. 12 12 hours coming down to the cloud kiss zone. We kiss the cloud and coming off it, but the cloud is pretty strong on the 12 hour. So the chance of breaking through this is not really my idea. You know, you normally if you break through when it's thin and then you bearishly retest it, then that short play could be juicy at that point. You wait for like candles to fail on the cloud, but we're currently above it. So that could suggest just a refuel to bounce off the cloud here on the 12 hour. I have something that I do, which is like the 22-hour time frame, which is kind of a broken time frame because it's 22 hours and 2 hours and 22 hours and 2 hours. So it's a unsyncopated rhythm of candles. And within that, the stochastics reset in this weird way. So you can find these long opportunities and short opportunities when other time frames are overbought. So here, like you had the 22 reset, the stochastic RSI, and then we surged up out of there. And now you got overbought, which is alluding to that reset. And we had that, it always resets on the daily close. So that's why we had this kind of reset of the stochastic on the 22 hour. And yeah, so the daily is in our favor, but it's getting turned down by potentially, if you get this alarm cross on the Williams, then that could lead to some pullback. We've been seeing this adaptive rejection on the daily time frame for the last 1, 2, 3, 4, 5, 6 hits to it. 7 if you count this. So what are we at right now? 72. I gotta bounce out at some point, just so you know. Like, I got my daughter with me, so.
Yeah, do you think, man? Do you think? Do you think?
885, 27885. So this baseline not being beneath the price right now, like ideally you want to see this cross up.
Yeah.
This is kind of why I was like trying to take that 618 bounce out of here, but it faded on the cloud here. It didn't get through. "15-minute could start making its signs of reversal. We had that 5-minute cross that we talked about here. It's starting to show some sort of weakness on that baseline, but if you get some people to show up, or basically it wouldn't be longs showing up, it would be shorts showing up to kind of bring it up. So the 15-minute, this coming down beneath the candle is what we like to see. I have the transparency turned down on the indicator candles because I want to see where the baselines rest beneath the candle or not. So this baseline starting to come beneath it on the 15s, starting to show me this like ice cream scoop, trying to bring the price back. Similar to what it does here, you know, it starts to come under the candle, and if the candle closes above the baseline, then it starts to bring it up. So you get to monitor in real time how the candles start to reclaim these dynamic momentum leading moving averages. And that's what these guys are using to like get funded and shit. I'm about to join them because I did a simulated account of the S&P. That's why I got the data and everything. Like I turned like a 50 grand account into like 75 in a few days. So it's possible. So it's starting to reclaim this baseline, which is a good sign for that. If you were like one of those like liquidity grab scalp guys, you just ride this up, and you watch it cascade. We talk about it as like cascading. So you see this crossover on the 5, and it's reclaiming the baseline, and then you go to higher time frames like the 10-minute, and it still has yet to reclaim and see that crossover, but it has reclaimed one, and that if that reclaims and crosses this, then you start to see more. And it's basically like triggering bots or triggering algos to do their thing. The higher the volume in the asset, the more accurate it is. So that's why a lot of the dudes use the S&P and NASDAQ. Because one 5-minute candle in the NASDAQ contains like more volume than Bitcoin in a day. So if you can accurately predict the reversals of that, you can just print money, basically. So you got a long way. You got to reclaim that zone, and then this baseline becomes its thing. And so the hourly is getting that strange rejection on the 77 region. It wasn't even considered overbought just yet. So that was a straight up false move Monday liquidity grab. And that's why false move Monday, the cycle for the week that you should, Asia has already entered Monday. I'm in Asia, by the way. So Asia starts the week with Monday, which is false move Monday. It has a lot of wick whacking and unpredictable moves. Then you have Tuesday, Wednesday, which is the play for the week. And that's kind of why I was looking at the 25.4 region. I was thinking that they would do the liquidity grab and then rise to 29.4 personally, based off of, the bubbles that I was seeing up here in short liquidity and on the higher time frame. So that's why I'm not really sweating being a negative like $200 trade. I made $300 last night, so F it, but yeah, the basic idea is like I created that narrative in my mind. I was seeing the cloud bounce and maybe seeing a potential cloud bounce here, but false move Monday brought us down. But we did maintain this ATR, which is cool. So the 4-hour time frame is still good to me. You got a low stochastic, low RSI. It's starting to curve nicely. You got the money flow beneath the price. So the 4-hour play is looking pretty cool, I think, in terms of momentum. And that's why I don't go solely off of momentum, because I don't want to get unreasonably bullish off indicators. You kind of need to toggle it like a heads-up display. Like you just saw how I toggled one on my screen, right? So you toggle it on and off, and you use them like predator vision to kind of see what momentum is giving you. And these dynamic levels, I've spent the better part of 2 years like back testing and throwing out the shitty ideas that people put out and keeping the good ones like a salad bar, and developing it into an indicator and creating my own original formulas. So it's kind of like momentum is a real thing that you should pay heed to, as well as liquidity. And momentum has its own ups and downs, and you have this bearish divergence on the money flow that played out, and it's something you need to like pay heed to. Like, I don't get why ICT traders become all elitist about no indicator and stuff like that. I don't really get that. It's like, why can't you do both? Like, why do you have to have just nothing on to brag that you have nothing on? That doesn't make sense to me. Just don't buy into one idea only. Like, stack confluence on confluence on confluence to get more security in your idea. That's the way I operate anyway. So yeah, like I turn them on and off. When I'm doing fibs and other stuff, I turn it off, and then I just kind of look at the fibs for what they're worth. Let's go back and just do a fib. Where did it bounce here? So if we take the fib tool and go from the impulse to the impulse here, this is like a higher time frame 618 region. So I was doing a local impulse idea from here to here, was it? No. Yeah. I was doing this one and expecting this 618 to bounce. And now we're seeing a bounce on this 618 of the higher or the external. Well, it's not even external. It's just a different impulse 618 bounce. We saw a previous bounce here, and now we're seeing another one. And if you don't know how to like set your fibs, you can set templates, like, so it's not just the messy basic one. You can kind of like make it into the pocket. My pocket is like 618, 6.65, 0.66, and 706 for these institutional levels to look out for too. So the 0.618 is a real thing that does bounce in both directions. So if you take this impulse down, I put this out on Friday. I was saying look for a 618 rejection, and then I went on a field trip for my work, and I just rode that down all day. So the 618 bounces are a true thing that occur. So are we going to see a 618 bounce that comes up into these
Illuminated.
regions? Yo.
Yeah, I'm gonna go put my son to bed real fast, and then I don't know how long you're gonna stay on or not. If for those that are still here, if once I'm done putting him to bed, I'm gonna jump back on and look for trades. If I don't get to
Sure.
see you tonight, brother, thank you. I appreciate everything you've done today, man. Like
Yeah,
amazing
man.
info as
No
always,
problem.
bro. Amazing, amazing.
Yeah, likewise.
All right, brother. I'll
So
talk to you
yeah,
guys soon.
I'll try to be if by 15 minutes, if that's cool.
Yeah, I should be back by
All
then.
right. All
All
right.
right,
Cool.
all right, man.
Yeah. So yeah, you're seeing the 618 potential bounce out of here. This 236 idea is a trend-based fib extension tool. How do you do trend-based fibs? So I'll put this back. I'll show you how it's done. So basically, a trend-based fib tool, which is really cool, is 3 clicks, and you go to your fib tools, you favorite your trend-based fib extension, and you could do 3 clicks. The first two are your impulse, and then the third is your retrace. And within that math is the algorithm's intention to continue higher or lower. If you have that downside impulse and weak retrace back in, it gives you that bearish tone as well. So within that, you see the 236. This is a daily impulse retrace trend based fib, and the 236 we maintained. So we surged up, got rejection on the 706, came back down, went back up, and we were meandering around a daily bullish trend based fib level between 1 and 1382. So this 1382 level, this should be default. How do I? There we go. So this, let me remove that. So this level is what people have been removing their positions, taking profit, liquidating shorts. And so this one level at 28,458 hasn't been a coincidence. It's locked in this impulse retrace idea in the math, and you can use that fractally and get more granular. So you can use this impulse retrace and that 236. If we maintain that, creates a zone which happened to be a previous point of interest for me, which was that 29,222 liquidation up here, which I shorted, or yeah, and yeah, I think I shorted that. Yeah, I did. And so now you got an even more granular impulse retrace idea. I think we established that 618 bounce. So you basically do that impulse. I'll just do it fresh. So you have the impulse retrace idea from the start of the impulse to the end of the impulse, down to the bottom of the first retrace. And so until we can reclaim 2884, then this bullish projection to the upside is null and void. and this gets more granular. And I was just looking at the 786 confluence regions of here in this zone being at the 29.4 and 29.5 region with the liquidity pools. It makes sense to me, so I was marking this zone off if we can reclaim that 2884 region. So we would have to reclaim that and reset some stochastics and try to create a narrative where this would be like a kind of like shoulder, head, and shoulder out of here like this on a 4-hour time frame. Like it would have to be something like that where you kind of get some sort of reset and loveliness to get bullish out of there, and then that measured move would put you up in that region if that were the case. So once again, the 4-hour has to play ball, and the shorts liquidity has to maintain these nice juicy bubbles intact. And yeah, these guys below are still not targets. They could easily be targets if you get up to this region and fade. So it's all if-then statements, and then you place your bets. So you just see what you see. You get a kind of bias installed based off all the information you suck in, and then you place a bet and then see if it plays out, and then don't ride it to your doom. Always protect your entry and set a level where if it breaks this, that's my breaking point. So yeah, that's what we see. Anyone got any questions? Who's here? We got a few people. Thanks for stopping in. So these ramen noodles look like they're coming back into that fair value gap to eat these guys. We're looking at 27.88 conservatively, but looking at the momentum, if we get those crossover events, you could be seeing that cascade. Got the 3 time frames oversold here. You're seeing offloading of positions here with that volume leaving here. You had that previously here and it dumped out. This is like a cumulative time frame volume delta that I created. I don't know if it exists currently, but it kind of tells you which side when people start stepping in to buy and sell. This cloud is pretty thick though. I'm not really liking it for like a long. It was better back here. But in the bearish times is like when in these dumps is when you should be looking to long. For me personally, I'm one of those like not bottom feeders, but I use these indicators to try with levels to try to just snipe red candles, and conversely with tops, like sniping that 28.7 region. Yeah. So let's you're at the bottom of the Keltner channel, which is again that ATR based thing on the hourly. So you should realistically see a bounce on the hourly time frame.
Hello.
Hey, what's up?
Hey, it's me, Rosman. I use the Mac, right? Mac Cross.
Yeah.
Usually the orange line is the one that is heavy, right? You're showing the heavy support or heavy. I'm sorry, heavy support down or heavy support up.
You're talking about this line?
I'm talking about, yeah, I think is that
on
one.
the
Yeah,
price action.
on the price
Or the-
action. Yeah.
Okay. Yeah, this is the adaptive moving average. So when you have it working against you and you get rejected on the adaptive, you start to dump out of it hardcore on these higher time frames. And when you have it beneath you and the price bounces off of it, these become extreme support. It's a kind of adaptive formula. It's available for free as
That,
well.
that that's in a one day time frame, or what was the time frame?
This is the 4 hour, but it
4 hours.
works on all time frames. So if I go to the daily, that's going to appear here above the price action. So that's what we've been seeing a rejection on, which is why I shorted over the weekend and left that open for until yesterday. I was expecting one more hit to up this region based off the liquidity, but eventually we could come back down. We are at the outskirts of the Keltner channel, so if you're trying to look to install a short idea, this is where you would find it. You're seeing offloading of positions. You're seeing a
Yeah, I got it on the same.
adaptive.
Even I have it with the line the settings.
Yeah.
The I think is the line or the third line down. I have it as a line and cut, like show me the cuts. So
Mhm.
it showed me like when it shows me a blue line, little blue line when it's heavy, where it's heavy. You know what I'm saying? I'm gonna I
Right.
wanna I'm gonna do it right now. Let me let me be.
Hold up.
I'm gonna just make sure.
You want to show your screen or
No,
what?
no, 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 no. Just make sure
Oh.
was what I have.
So this is the baseline also appearing above price on the daily. So this is kind of a bearish idea too. My
Yeah,
baselines.
I have it on the settings macro style. I have a like line with breaks,
Mm-hmm.
and the third line, the blue line.
This one,
I have it with a line with breaks.
a line with breaks. Can you post a
Uh-huh.
chart in the chat?
Yeah, I can do it. I can do it right now.
Yeah.
And it shows a little blue line up when where I think is heavy selling or heavy buying whenever
Right.
whenever is the trend.
Yeah.
Okay,
Can you
I'll
post?
do a snipping tool right now.
Yeah. Mm-mm-mm-mm-mm. Yeah, that 5 minute cloud just not looking so hot right now. You are getting that crossover event, but unless you see some sort of shenanigans where it just gaps right up, I'm not really sold on the long anymore for the interim, for the immediate. It could come back down into those pools, into this region if it goes to that 2788 and fades. But yeah, that was. Let me see what you're looking at. Do you have it? MA Cross. What is the? It looks like it's moving average of 9 and 21. What is the actual moving average? Simple?
That's what I know a little bit more about because I know the it works for me whenever is the blue line
Yeah,
up in a red candle. It means that it's going down, and it depends on the moving. You know the supply and whatever you have up. It means that it's gonna be a big drop. You know what I'm saying?
gotcha.
For me, I don't
Right.
even understand the 9 and 21, but I do understand the line up, the blue line, the little blue line, and the
Yeah,
red candle. So I have a supply up, and I have a blue line on my candle. So it means it's gonna be a drop for me, it's gonna be. For me, for example, this trend started from 24,473 and stopped at 29,200, right?
Uh-huh.
So for me, it hasn't touched the 25, for example.
Right.
So all this down and up, it means that it's trying to go down, but as many times it touched the supply, that it doesn't exist until we touch. For me, it would be 3,900 for me.
3,900
For
on
me, and until we don't touch the 3,900, we're still gonna be touching maybe 26,600. I don't know.
are you you're talking about going down further basically?
For now, until
Yeah,
20
I
at
mean,
least.
there's definitely a narrative in mind where you could see this kind of double top scenario play out to go down to these regions. It's not out of
Mhm.
the realm of possibility for sure. You have
Yes.
this external liquidity range 618 that we could come back to and tap into it again. Somebody's calling me again. My friend, he wants to see if I'm coming over. I gotta call him back in a few minutes, but yeah. So I mean, it's not out of the realm of possibilities. We did pave the path in both directions. There is
I,
pools
I,
down
I,
here.
I just made
They
a trade from 2,800 to 27,700.
good shit.
And I was scared when it went up. You know what I'm saying? I was like, oh my god, what I'm doing. But I just believe in myself, and fuck it. I'm gonna
Yeah.
wait.
As long as you're consistent, like if you close out into profit and like realize your profit when you have the profit and then don't expect for the moon to bring you more uh providence, like just
Yeah, yeah, yeah,
trim
yeah,
as you
yeah. That's
go.
that, that,
That's
that's
that
that's
as long
that's
as
the
you
main point.
reward yourself and protect your entry, then you're on the path to greatness, you know.
Yeah, yeah, yeah.
And everyone's here still trying to figure everything out because it's different every day.
Yeah,
So
it's different. Yeah.
that's cool. Yeah, like
I mean, I've been
once
losing so
again, the
many
cycle
trades.
is like Monday is like a false move, so they
Yeah,
false move it in one way and then go the other way, or it's just a lot of shenanigans happen on Monday. So Monday
yeah.
is one of
I've
those
been losing. I've been
risky
losing so
times to
many trades
trade.
for because of confidence. And
Hmm.
I think, like you guys said, we need a work team so we can show our trades, so we can be more secure about what we do.
Exactly. Yeah,
Yeah.
I agree. So it's looking like, I mean, I'm getting ambiguous about where it's at right now in terms of whether it continues to the downside. The liquidity does suggest if it does do continue its liquidity grab, there are stacked pools on the 1 minute down here at the 27K region if it continues to knock those guys out and before going up, or it could just continue lower. But as I said, the higher time frame suggests there's a large pool up at 29.4, which it could come easily up as it had in the past to tap out some of these pools. So, yeah, I mean, just levels to watch as you go lower and higher. Always be careful of what it is aiming at on a higher time frame. To me, looking at these higher time frames, I'm not necessarily bearish yet. I don't really see so much juiciness down below as I see just a hop, skip, and a jump above. But could be wrong. Always leave the possibility to be wrong. And on that note, I'll let Kenny D come back. I appreciate you guys coming on in And yeah, that was a fun little TA session. I got to skedaddle to my friend's house, so I appreciate you guys coming on in, and I will catch you on the flip side. Hey? All right. Thanks. I'll catch you guys. Peace.
Thank you.